Kancera has received a serious blow, but just how critical was last week's hit, and what is really at stake from now on? Kancera is a truly interesting stock technically, for it displays a mix of polarized opposites. On the one hand, it shows immense mid to long-term strength, on the other, it has taken a lethal blow to the face. It is now our job in this episode to determine what can be expected from now on. Now, first of all, this drop last week is nothing but brutality. Minus 33% in just 4 hours and at massive trading volumes. You just don't stand up and continue fighting right away from such knockout blow. Just look at the RSI on the hourly. This entire aftermove is the stock crawling on the floor looking for its teeth. I don't know what really happened there, but they might just have picked on the wrong guy. And looking at the hourly, this blow not only shocked the stock but also knocked it down below a cluster of EMAs and red Kumo resistances. The aftermath of this event caused the stock to break out downwards from this beautifully ascending channel that had been building up for half a year. But there's still hope, for although this was a temporary defeat, a hurtful battle, Kancera can still win the war. Now, during its 5-year-long downtrend, Kancera was rejected by the weekly EMA 200 time and again. When it finally broke out of the trend at never-before-seen trading volumes, it retested the EMA 200 on the weekly twice, and both times it held up. Since then, it retested a breakout top at 2 kronor, upon which it again took off. We are currently testing the area around 290 to 295, and this level is technically key. Not only is it the previous local top, it is also an important short to mid-term horizontal support line, as well as the EMA 50 support and the green Ichimoku Kumo support on the daily. And on top of that, the RSI on the daily and weekly still remain in solid bullish red channels respectively. Now, the price has already peaked at 1300% at most since the March bottom. And what separates this uptrend from the previous one is that the previous one wasn't supported by any significant trading volumes. This one is. For this trend is record strong. Failure to stay above this critical support level is not that much about whether Kancera will make it or break it. The mid to long term trend is just too strong for the short term to pose a threat. So if Kancera is record strong from a zoomed out perspective, what then exactly is at stake from this short-term damage? Here's the thing. If Kancera manages to stay above the support cluster at 290 to 295 and squirms its way back into the ascending channel, leaving the dark wet short-term cluster resistant blanket behind us, it would be the recovery needed for Kancera to maintain its mid to long-term momentum. For zooming out on the daily and weekly, if we can recover from this temporary blow, it will be a mere glitch on the graphs. If the price breaks below this cluster on the other hand, it might be it for some time. Do note that I'm not saying it won't recover. What I am saying is that we might be in for an extended wait before the price is ready to continue upwards. In this case, it is rather about whether it will be able to continue riding its strong momentum or not. For momentum is a wave, and if you cannot stay on it, you'll plunge into the water and will have to paddle your way back into the ocean to find the next one. So let's just hope the support cluster at 290 to 295 holds up so that we can continue surfing this technical wave. For this wave seems to be a big one that can take us far, and we sure want to be on it rather than wasting our time paddling into the ocean in the wait for the next one. That was all for now, thank you and goodbye.